Creative ways to finance property, owner financing and lease options. Welcome to this quick tutorial on creative property financing strategies. Whether you have bad credit, are new to investing and don't want to take out a mortgage or just want alternatives to traditional loans, these methods can help you invest in real estate even if you have never owned any property before. Are you ready? Okay, let's dive in. 1. Owner financing. What is owner financing? This is when the seller acts as the bank, allowing you to make payments directly to them. It's one of the most flexible, profitable ways to obtain real estate because it allows you and the seller to include what is most important to both of you. You can actually decide what you want your monthly payments to be. How long will the seller hold the mortgage, and what are your responsibilities? This eliminates the need for a traditional mortgage. Steps to get started are: first, find motivated sellers. Look for properties where owners are open to negotiation, often when it's been on the market for some time or it's not in top marketable shape. A good place to start is through real estate listings or local networks. Next, negotiate terms. Before meeting or speaking with the seller, write down the particulars you need to make the deal work for you. Agree on the down payment, interest rate, and repayment schedule. Create a contract. Work with a real estate attorney to draft a legally binding agreement. Decide in advance with the seller who is responsible to pay what costs. Best sources for owner financing. Online platforms like Craigslist, Zillow. Search for sale by owner or fsbo.com. forsalebyowner.com. Real estate agents specializing in seller finance properties are a great source. They know what sellers have been on the market the longest. Networking at local real estate investment meetups is another good way to meet sellers who are already considering more creative ways to sell their properties. 2. Lease options, also referred to as rent-to-own. What does options mean? Lease option is when you are actually leasing the property, much the same as a renter would. The difference is you are leasing a property with the option to buy it later at an already agreed upon price and terms. A portion of your rent may count toward the purchase price or closing costs. This is a win-win for both parties. You get to tie up a property today with terms that work for you, and the seller collects the monthly rents, and the seller gets to keep the money you put down to execute the option if you don't perform. Steps to get started. Find rent-to-own properties. Search for listings that offer lease options or approach landlords of vacant homes. You might also approach sellers who have been trying to sell for a long time. Remember, they are still making the payments. Negotiate terms. Decide on the lease length, monthly rent, and the portion credited toward the purchase. Option fee. Pay an upfront fee for the right to buy the property, usually 1 to 5% of the property price. Best sources for lease options. Websites like rent-to-own.org or rentown.net. Local classified ads and real estate forums. Word of mouth. Talk to landlords or real estate agents who know of flexible sellers. Additional tips for success. Do your homework. Always conduct a property inspection and review the seller's financial history. Work with professionals. Use a real estate attorney to ensure your contract protects your interests. Be flexible. Tailor agreements to benefit both parties while securing your long-term goals. These methods provide flexible and accessible paths to property ownership, even if traditional loans aren't an option. Good luck and happy investing!